Boom. Okay, we're live. You know, we're halfway through this bull market, and one of the things I wanted to touch base in today, seeing as we're not doing a live stream, is something we go over often called venture capital. Now, the term is an old one, but really I think the most important part to understand is asymmetry. Now, this is a mathematical perspective, which basically means you have very limited room on one side and infinite room on the other side. So let's use my little brother as an example. My little brother's a bunch of years younger than me, and I told him to start buying Fetch, Matic, Seller, and One around June or July, which was the, kind of the start of the bull market effectively. And I told him, like, look, these are venture capital investments. They could be worth nothing. Again, this is the downside of asymmetry. You could lose it all, or there's an infinite upside potential. Now, to this date, from his original entries, Fetch is up over 8,000%. That is an 80x on the money that he put in. So he put approximately $50 in and is sitting over $1,000 on that play. That means if you put $1,000 in, you'd have $50,000 from each of those percentages. So from an investment standpoint, venture capital offers the highest returns with the least amount of effort. And this has always long been one of my favorite ways to play. How do I get the most result for the least amount of effort? Now, it's a difficult one to manage because everyone usually thinks, oh, I need to invest this huge amount of money for it to return a massive amount. But again, for every $1,000 you put in, that's $50,000 of capital that you would be sitting on in a return. Now, Fetch, Matic, Seller, One, Raven, every play that we had in our venture capital portfolio from the private investment group has done over 4,000%. Some of them 8,000%. Avalanche was 3,300% at its top, and probably still has further to go. And this is the important part to understand, is that for the duration of the bear market, the bottom of the cycle, Fetch did nothing, Matic did nothing, Seller, nothing. It wasn't until the bull market started. And that's why we constantly go over all these ideas of trying to figure out, well, when does the bull market start and when does it end? Because if you know when it's starting, you can double down on all of your original investments and you can put your thesis to work for the long term. This is a huge advantage to whatever you might want to do, because ultimately everyone are looking to get rich quickly and you can't do it. Now, there's times when you can get lucky and the market can happen to be moving in the direction that you want it to go right when you enter, but it doesn't do anything because you want it to. The duration of 2017, 18, and 19 was fucking boring. Our newsletter, we wrote about Matic, Fetch, Seller, and One over and over and over again. And then in this year, or I guess last year, in 2020, is when we saw all those returns finally come into fruition. This is hyper important to recognize, is that you can't get impatient with your investments. You have to be calm, focused, and understand why the research that we do can be so valuable into the future. Now, I've had so many private members message me over the last little while who have made over hundreds of thousands of dollars by only putting a few $1,000s in to their original investment thesis, the majority of which was at Bitcoin, and then small investments of only $1,000 in Fetch yielded them hundreds of thousands of dollars. So I wanted to use the time today to reiterate what I find so valuable about investing. This investment thesis, the most amount of result for the least amount of effort, asymmetry, and venture capital is what we will be leaning into for probably the duration of Arcane Bear's life. Now, we will still use the Wyckoff trading ranges and the Livermore patterns to help identify when the bull market is officially starting and when it's officially over, because it allows us again to really lean into our investment thesis. Anyways, I'm sitting here by the beach right now, and I just wanted to take a quick moment to let you guys know those 100x gains, they're not necessarily over, but you need to be thinking decades into the future to really understand how this stuff works. This is not the first bull market. It is not going to be the last. The next bear market will not be the first, and it will not be our last either. Knowing how to take advantage by doing your research, by doing your homework, and even making the smallest of investments can yield massive results. Anyways, this is T with the Arcane Bear. Thank you all for joining us today. I had a really great time. I'm having a great time out here. Look how ridiculous my hair looks. You could tell I'm in no way put together well. But anyways, I wanted to, I had so many positive messages from some of the Arcane Bear members come in about these huge returns. And I wanted to share that. I wanted to share my sentiments around venture capital and asymmetry. I know I repeat it on the show, but I don't think it can be overstated. Asymmetry, limited downside. You make a venture capital bet. You put in what you're willing to lose, basically, small amounts. And if you get it right, the upside is 50, 100, maybe even 1,000x over the next few years. Anyways, the Teal with the Arcane Bear. Please give us a like if you enjoy this content. Remember to leave your thoughts, your comments, your questions down below. I do try to get to them all. And yeah, leave us some comments about your guys' enjoyment of venture capital, what you think of the understanding so far. You know, there are a bunch of different ways to play this. You've got choices like AngelList, but more specifically, I just focus on the crypto sector because it's one of the few things I have a grasp about. I'm not trying to get into biomedical, pot, MDMA, mushroom stocks. Like, I just don't have the capacity. But this sector, I've focused on for multiple years now, and our research has done extraordinarily well. So yeah, shout out to all the private bear members who were able to win off of our original portfolio. And the secondary portfolio we've been building now, which is a little bit more broad, includes things like Avalanche, Rook, MStable. Well, you can see them all by going to arcanebear.com/club. We're going to be promoting most of our research for free, and then the deeper dives will be part of the paid and private group only. Anyways, we'll leave it at that. Thank you all for joining. We'll see you on the next episode.